Proud to welcome you to our flagship financial literacy seminar that is being held for the fourth time in Pune. May I now invite Ms. Dalal to start our first session.
20 years of economic liberalization, India's investor population has shrunk from 20 million to 8 million. It is something that people like Moneylife keep talking about all the time because nobody else wants to see it. Nobody else wants to see it, nobody else wants to say it, because there's too much of money riding on a fake belief that we are in this great liberalized economy. Everything is booming, the markets are going up, there are jobs created because of it, and investors are coming to the market. In fact, we ourselves for 10 years were misled by the fact that turnover is soaring, and that should obviously mean that if there are, where it was 300 crores a day, if your turnover is 60,000 crores a day or 1 lakh crores a day, it ought to mean a proportionate increase in investors. And even those of us as journalists who are so close to stock exchanges and people weren't aware and were fooled by the fact that nobody ever talked about the investor population. Where are the numbers? Okay? So I'm going to run through what is really happening in our system and our society. And why is it that investors don't want to invest in the market? Okay. One of the things we feel is that people don't understand risk. And this is nothing to be ashamed of. Debashis likes to say people's eyes glaze over when it comes to numbers. That also, modern research shows, is nothing to be ashamed of, because our brains are not hardwired to understand risks of speculative investments or even complicated financial ratios and things that people expect you to know. So it's constantly telling you, investor beware, read the fine print. But 20 years later, after a big global crash that's happened in 2008, there is new thinking and new research to say, why did people invest in all kinds of crazy products, which in retrospect, on the face of it, looked so toxic that how on earth did people put their life savings, hard-earned money, take fresh loans as they did in the US to buy bigger and bigger houses, and the little appreciation in their prices also they used to monetize it. And it all looks so crazy in retrospect, but now people have done research to say that is the norm. Okay, you can keep saying investor beware, but it's not possible for an ordinary person to look at it. There will be maths experts, there will be derivative experts, there will be PhDs who will do this for you, they will understand it. But the ordinary person does not. What happens to us? What we do is we tend to translate our experiences in buying consumer durables. Okay? So when you buy a fancy car, you pay more for a BMW, you expect that it's going to work better than your little Wagoner maybe. You pay for a Rolls Royce, you get something in return for that payment. In the financial world, if you say that I won't go to my public sector bank or my cooperative bank, let me go to HSBC or Citibank, it doesn't mean that you will get anything different, you'll only pay more. And it's a strange and shocking truth, but that is a fact. If you buy a mobile phone, you buy an iPhone, there is a difference between an iPhone and a low-end Nokia, right? Not so in the financial world. In the financial world, you take a risk equally or you watch patterns for a long time. That is the reason why when we buy financial products, we expect, and these are calls that we get every day in Moneylife. There are senior people who've been editors of the Times of India who will call us up and say that, I'm going to put my money in Barclays. Isn't that great? And we don't know what to say because we keep telling them, read Moneylife. You will hear about the Barclays, the HSBCs, the Citibanks, the Reliance Insurance. But no, nobody wants to take the trouble to read even that much. They want an instant answer. And if somebody asks me what is an instant answer, is HSBC or Citibank better than State Bank of India or your local cooperative bank, City Union, something, I am not going to be able to answer it unless you're able to run through what we are trying to say about basics and fundamentals and why people make mistakes that they do. But the cleverest of people want an instant answer, press of a button. And if we don't have that answer, a lot of people are daft enough to think that it's because we are biased. But the fact is that your experience in buying a washing machine which is plugged and played, Your experience in buying a mobile phone or a toaster does not translate to financial products. And if this is the only takeaway that you have from today's program, I think you would have been 50% on the way to being safe with your money, because you learn to think differently. Look at these numbers. Okay, this is how the index has been soaring from 92. And this is your curve of the investor population. It was 20 million in 1990. It included units of UTI. It is 8 million according to the Swaroop Committee report. Every single number that we quote over here is an official number from SEBI or RBI or the ministry or whatever. None of them are made up by us. It's not our own surveys. So the next question is, where are these people putting their money? Because it is a fact that people have been earning a lot more money in the last 20 years, and that money is going somewhere, right? So a lot of it is definitely going into property and gold. But the strange thing is, the biggest chunk of money is going into bank FDs. Okay? People have burnt their fingers at various times. 92, barely the market started moving up, Harshad Mehta scam. Something else happens, the whole IPO mania, vanishing companies, people lost money. People then lost money in plantation companies, discovered they were unregulated. Then you had the big global IT boom, and you had the Ketan Parekh scam. So you look at it like a cycle. Every 3-4 years, there is a major scandal that has taken away people's savings. So what happens? The next lot of money quietly goes into bank FDs, because how much ever people tell you that you are stupid, inflation is eating up your money, you then tell yourself that yes, it is taxable, yes, it is below inflation, but at least my principal is safe and I'm earning something. So that's what these numbers tell you. Why does all of this happen? Because we have created a financial system where a whole bunch of people are earning enormous commissions to sell. Okay? They are in the business of selling. And they are bombarding you in different ways to make you buy whatever it is that they sell. So what happens to insurance and mutual funds? They are focused on the commissions that the agents earn, so they are selling to you. They want you to buy without thinking. What are companies doing? They want to raise money from you. Why is it that suddenly the finance ministry and the prime minister have woken up to mandating that Ministry of Company Affairs and everybody else conducts more and more financial literacy workshops? Not because they really care about your savings, but they have realized that if you want infrastructure development in this country, you want capital formation, they want people like you and me to put our money in IPOs that happen when companies go public. And today, investors are just out of the market, which means that all that money will have to come either from banks or from the government itself. They cannot afford this. It's taken them 20 years to realize that you can't have a system that works only on the basis of foreign institutional investors and what they churn in the market and the kind of high voltage trading that they do in derivatives. They need you and me to put our hard-earned savings in the market. And that is one of the only reasons why financial literacy and financial literacy seminars are the biggest buzzword in the market today. What happens to the media? Okay? That's why I said that some of us feel foolish that we make this effort to talk frankly, because even in the media, it is advertising that drives what we say. Lots of people will not tell you the truth about products because it means losing ads. And there are a few of us, we run small magazines, we say it's worth it, we will take the risk. Maybe the people who read will appreciate what we are doing. The jury is out on that one. We are still not sure whether anybody appreciates the fact that we are blunt. But the fact is that when we pay a price. But believe me, media is uninterested. I'm on Twitter all the time or on Facebook, and I hear millions of people out there saying, why doesn't media do this and why doesn't media do that? And I keep thinking that media has to pay salaries, right? And the more high cost they are, the bigger they are, the salaries are higher, the infrastructure costs are higher, and they need those ads. So for the last 3 years, if you see, property prices do not come down, even though not a single flat is sold, but you look at the wraparound and all the main papers, it is property ads. Because they don't give a damn, they're not about you, they're about themselves and their bottom line, and that's how most of the world works, right? So having put this scenario in place, we now look at what is it that you need to do. Just 5 things. You need to save regularly. Easier said than done. You need to avoid losses, which is far more difficult. In fact, it's the most difficult thing to do. And you need to insure correctly for contingencies, which is one of the most complex areas. In fact, this time we have, for the first time in our seminars out of Bombay, we have a special session on insurance. You have to invest smartly, which is what Debashis is going to handle in the next session. And then finally, you have to pass it on smoothly. This is something that you need to read Moneylife for, because we have not included it in today's session. So starting with not to lose money, and that is what I focus on. I keep saying, don't be part of this group that you're seeing on your screen. These are part of 30,000 people who invested in a company called City Limousine. And this is just a small bunch of them. They want the police to do something about getting their money back. And who are these people? As you can see, this is an article about that event. There are 6,000 policemen, 200 income tax officers, 15 RBI officials, 300 from Mantralaya, which means anybody who ought to know better was there invested in that scheme. So where's the question of you and me knowing better, right? And in fact, a lot of these people encourage you to buy them. Now, City Limousine is just one small thing. Why do I talk about City Limousine at my seminars? Because as a financial journalist, we hadn't even heard about this company until we saw this photograph of the crowd. And it was quite astounding, because every one of you who's here knows how much of an effort we made to reach out to you, right? And look at the state of affairs. And 30,000 people in a company that has never had to issue an ad. So how do they reach people? How do they inform them? How does anyone know that they exist and actually put their hand in their pocket and give away the money that they have? These are all part. The biggest manner in which people lose money is what we call pyramid and Ponzi schemes. Okay? These are all part of the same game. You call it Ponzi, you call it MLM or multi-level marketing schemes, you call them pyramid schemes, and the people who are selling them are the guy next to you. My colleague Yogesh Sapkale was in the train today coming from Bombay, and he heard a woman hard selling Herbalife. Okay? Because they are all around you, selling you Amway, Tupperware, Speak Asia, name it, and you are putting in your money over there. The bottom line here is that I, in the last 20 years, have not known of any of the schemes that hasn't collapsed over a period of time or has not given the returns that it promises that you will earn. Okay? So you have these which are called binary schemes, which is everybody encourages 2 more people. So you become a member, you have to get 2, there's a right hand, left hand, some kind of crazy matrix which sounds like high math, which is actually a load of rubbish. But it is all created to make you believe as though you've gone into a great, hugely mathematically researched model of earning money that nobody has heard about. But believe me, everybody has heard about it, because the biggest way in India that people lose money is through MLMs. There are some which are not 1:1, which are the most dangerous, the binary ones. There are some which are 9:6:3. I mean, any of you who bought it know I don't need to stand here and name names, but you know who offers you 642 and who offers you 963. But the bottom line there is some of them are multinational. They're able to roll money from one country to another, yet they do not give you the returns that they think or they promise at the time they call you for these secretive meetings in some hotels hosted over dinner and say that you're going to become a millionaire overnight. Look at the numbers. Okay? Like I said, 30,000 for City Limousine. Pearls or PSCL was the front page lead story in the Economic Times about 4 months ago. They've even gone public. They've raised 20,000 crore. People are not getting their money. Japan Life has folded up 5,000 crore. The chairman of Japan Life was very close to 2 prime ministers. It took 12 years to get him finally arrested. That company has shut down. Nobody is there. Gold Quest, legal advisor, wife of the finance minister. This is the kind of power that they have. Okay? It was completely shut down. It's back again as QI and extremely popular. Everybody is buying it. Every third day I get an email saying you write about pyramids and Ponzis. Why aren't you writing about QI? And we tell them because QI is reborn. It is Gold Quest that has come back to life. Nothing else. I mean, I can keep writing every single day. But if you insist that your money is safe and you put it, full and his money is going to be parted all the time. I mean, I can write every single day. It's not going to make a difference. Speak Asia. I'm sure everybody here has heard about Speak Asia, right? So 12 lakh people managed to invest in Speak Asia, 1,300 crore. Ask anybody to donate to a financial literacy cause and it's not going to happen. But 1,300 crore in less than 10, 11 months. And I keep telling people, I don't think lots of people lost money in 92 after I wrote about the Harshad Mehta scam, okay? And I may have got a Padma Shree later on, but a lot of people were upset about me writing about it. But even then, I didn't get abused as much as I did when we wrote about Speak Asia. Every single day we had email abusing us, saying, what do you know? What do you understand? Why are you, stopping us from earning the money we would? And now, where is it? Does anyone know where the guys are? They catch the next flight out of the country because today modern banking systems allow them to transfer the money out of India safely where they can't be caught. And all this company was registered in Singapore. The people who were involved in promoting it were safely sitting in Singapore. Singapore doesn't allow these schemes. And this is not something that I'm saying. That pyramid that is there is on the FBI website in the US. The SEC website, the Securities Exchange Commission, issues these warnings. In India, none of our regulators still issue such a warning. Okay, you want this warning? People are not being cheated only in India. They're there on their websites, on regulators' websites. They've done something else also. Binary schemes, which are seen as pure Ponzi, are banned in all those countries that I've mentioned over there. UK, Canada, Australia, Singapore itself. I put it in caps because here is Speak Asia registered in Singapore. They can't sell that crap in Singapore. They can only sell it to us over here. And we allowed them to. Why do we do that? Because all of them are hugely politically connected. And in India, you're politically connected, anything goes. The law is unclear, is what they say. We actually have a pretty strong act. Under the Price Chits and Money Circulation Schemes Act, even Amway and Tupperware are per se illegal, but they're allowed to operate. And there is a judgment of the Kerala High Court, I think, which says that something that is patently illegal doesn't become legal just because our authorities fail to act. And our authorities notoriously fail to act on a whole lot of issues until it's too late. When people have finally lost their money and then go and complain, that's the time, like in the Hindi movies, the policemen get up to lodge complaints, but your money ain't coming back. Somebody may get arrested, there'll be photo opportunities, the media will write about it, but do you see your money again? No. If anybody has, whether it is vanishing companies, plantation companies, anyone who's got the money, please tell me, we'll write about it. I haven't heard of anyone getting their money back. Luckily, on this, we have managed to mount a lot of pressure. So, last heard 1 week ago, the Foreign Investment Promotion Board, which is the backdoor through which some of these international companies came to India, is now looking at it. The Ministry of Consumer Affairs and Corporate Affairs are both looking at it. So, I'm now moving to the next set of things that help you to lose money. Has everyone heard about the Nigerian scam? Everyone has, right? Okay. So, I don't need to explain it, but I will only tell you this, that these are the kind of mails that you get. And those of us who know about it, we tend to sneer at anybody who still falls for it. But every day, the number of people who fall for it in India is so high that the Nigerians have actually set up base in India. There's something in the suburbs of Bombay called Nigeria Wadi. They don't even operate out of Nigeria anymore. They're out here. Okay? And I know a consumer activist who's lost 35 lakhs of his own money and ended his long, illustrious career as an activist by putting 35 lakhs in this. And I keep saying more than the money, it's his loss of reputation that is a bigger issue. And he had naive thoughts like, I'll get this 25 million and then I will set up an investor association in Nigeria and another in India and I will never have to go and look for donations. It's pretty tragic because at the bottom of it all, he actually wanted to invest that money back in doing good for society, but fell for it. So I told you about political connections for the MLMs, right? Here it's different. Here you have RBI, Ministry of Consumer Affairs, putting out ads to warn you. They're saying, beware of these scams, people are losing money. And the reason why they're doing it is quite simple. Again, not because they care overtly for you, but because the Nigerians and anybody who's connected with these IT-related scams is so good at using software and morphing and whatever, that they create websites that look like the Reserve Bank of India. They claim that the money that you're supposed to get or the lottery that you're supposed to get is put in an escrow account of the RBI. So every single day the RBI is answering questions from people who think that they won a lottery or they're going to get some dictator's widow's inheritance. And they keep saying, but is the money in the escrow account? I'm calling to check. So the RBI is putting out these ads to say, we don't maintain any escrow accounts for individuals. Please don't fall for this, right? Then there is the job scam. A lot of students here, you ought to know. Companies like Siemens, TCS, Kotak, Accenture, ICICI, all these have been part of the job scam. You need to know that none of these companies are offering you a job by putting out emails to say deposit 10,000 rupees and then we'll reimburse your airfare and your interview packages. Please don't fall for it. These people go out and do campus recruitments. They do not put ads through agents. Again, lots of students have put their 10,000 rupees for these ads. Then there are others. I'm just going to quickly run through them. BR agent, or I've lost my wallet. Lost my wallet is an email that all of you would have got sometime or the other. It means that when your mailbox is affected and they have got hold of all the addresses in your email box and people get a message, it's usually a nice sob story. Someone you know because that person's name is in your mailbox, and he'll say that, I'm sorry, I didn't get in touch with you. I was traveling abroad, I went here or went there, and I've been robbed. My passport, wallet, everything is gone. I'm trying to raise money to come back to India, and there'll be a Western Union account, and it says, please put whatever it is that you can. It's a low-grade scam when you think about it, because you can actually send 500 rupees. You're not in danger of losing more. But if you want to save even that, don't run to Western Union. Pick up the phone. Most often they will tell you, I'm right here and I need to change. Simple solution to it also. All you have to do is change your password on your email if that happens to you. And it's happening all the time. Every single day we come across someone or the others facing it. The conference one is a little nasty one. Okay, they target people who are connected with NGOs or organizations where they say that we've been authorized to hold a conference, usually abroad, and to send you an invite. Now, the simple question you need to ask is, why me? Okay? It could be a conference on global poverty alleviation, or hunger, or rivers. If you're not an NGO, if you're not working in these areas, you know that nobody gives you hotel and air tickets free unless you're actually you have long years of experience. So when you get a mail that says that we are inviting you and it'll all be taken care of by World Bank or UNDP, I think if you just ask yourself a few questions, you won't get fooled. But again, the bottom line is, I personally know of 3 people, one who landed up in Paris, one who landed up in the US, paid for the ticket, was told that it will be reimbursed there, and there was no conference. And what is it that the scamsters make? They tell you that everything will be paid for, but you need to pay a registration fee, which is maybe $100 or $50. So that's the extent of your loss. And obviously the number of people who fall for it is large enough for that small loss to make a difference. Phishing and wishing, this is something anybody who uses email ought to know. Every single day again. Don't you get these mails? Yeah? Every bank that you know of, and banks where you don't have a bank account also, saying that your account is going to be closed if you don't give us your password and your identification documents. Fill it in. I keep saying, bottom line, don't need to worry too much about how the scam works or what is the idea. Just suffice to say that no bank asks you for this information on email. Absolutely nobody. So if you get an email like this, ignore it. If you want to be more careful, call up the call center which you have. When you open an account, you have a number which you can call for help. Call that helpline. Wishing is a little different. It is a little more elaborate. It's done on your phones. So they'll call you up and say, we're doing an exercise to check, a verification exercise. Somebody will call you up in 15 minutes. This is an advance call to warn you not to worry. The second call is from the bank. It's safe. And so 15 minutes later, a very call center voice that sounds official calls you up. By then your mind has been primed and made up to expect this call. So they'll ask you for your password and details, whatever, mother's name, secret question, and you go and answer it. So if you get a call like this, please don't answer it. Please don't call that number back. Either ignore or call the helpline. Identity theft, again, like I said, true stories only. This is a lady who works, I think, as a domestic help. 52 lakhs was a bill that was run up on her mobile, which she didn't have. Kept arguing with the police that I don't have such a mobile with this number. She was still arrested because all the documents, the KYC documents, were in her name. And it's lucky for her that the police actually believed what she said, which is why they sort of did some investigation, and she figured out that it was her nephew who she had asked to get these details, and he had got 2 SIM cards. One which he kept for himself, on which he was, making calls to a pawn helpline. I mean, it's absurd because, he knows very well that his aunt can't pay. It's not as though he's got a rich aunt who's going to pay. But this is something that we tell a lot of women, that you have to be extra careful because most women tend to depend on somebody or the other to do all their banking work, to do all their KYC documentation. And it is a global statistic that 50% of scams, theft, even murder is by people who are close to you. It's family, friends. So I think a lot of Indian women especially are encouraged to think, not to think. They are encouraged to depend on somebody and say, they take great pride in saying, I don't understand anything about money. My husband takes care of it. So we think that it is in your interest to open your eyes a little bit, take interest, look at documents. I'm not saying start doubting everybody around you, but it is in your interest to take a look at what are the papers that you sign. Even when you're signing for a joint housing loan, we do some special seminars which are meant only for women, and it is based on horror stories about what happens because women are so blindly trusting and they're signing documents. I keep telling people that even a home loan, it's not that your bank takes a second signature from you when you're a housewife just like that. The bank does it to protect its interest. That means if something goes wrong, you can't make a claim about the house, which is the security that's provided for the loan. So not a single signature or joint application is taken by anybody for the heck of it. It is a legal requirement, and it's usually to protect the lender, not you. So if somebody who is doing this paperwork for you tells you nothing to worry about, it's just a signature, it's not correct. And maybe you don't need to worry, but you need to know that there are consequences. And you need to know that every time you put your signature down, even as a guarantee to anything, there are consequences. It goes into your credit record. Nothing is without consequences. What do you do if you don't invest in all these things? Where do you put your money in? So I think at a base level, we tell people that just avoid anything that is unregulated. Okay? So whether it is an Ocean art fund which tells you art is the hottest thing that's happening, M.F. Hussein's paintings have doubled in value, that's fine. But if you don't understand art personally, don't put your money there. Same thing goes for plantation companies. If you don't know land laws and whether the person has got it or not, you can't be sitting in Bombay and investing in a plantation in Tamil Nadu or somewhere else. People have lost, I think, 20,000 crore in the 90s in these plantation companies, just looking at terrific ads in the mainstream media and on television. So look at something that is regulated by SEBI, the insurance regulator, the pension regulator, or the RBI. This is basic. And if you had taken care of this, you would have ensured that people didn't put money in things like the Sahara hybrid debentures. There's a Supreme Court order yesterday. You would not have put your money there. Look at these ads from Sahara. Okay? I mean, at a time they used to threaten anybody who said anything about this. But this is a notice which says that they had actually raised, and we are not even talking about the 20,000 crores that they've raised through optionally convertible debentures. This is before that. 73,000 crore. We talk about Ponzi's. Have you ever seen, is anyone here an investor in Sahara? Nobody, right? I mean, it is the biggest mystery. The Supreme Court for the first time in its judgment last week has said that their investors are people like Kalavati with no address, no number, no PAN card, nothing. And we've kept writing that when the RBI asked them to return this money, you look at this ad, there's no logo. Sahara India Parivar with a logo is on every cricketer's t-shirt, right? But when this is an official ad saying that they're returning not 100 rupees or 5,000 rupees or a crore, 73,000 crore. There is no name of the company secretary, no logo. And not a single regulator has bothered to act on them and say, what is this? We have written to the RBI any number of times. We've written articles to say, how do they get away with this? What is this money? When did they raise it? Where is that money invested? No answers. I have asked their PR people, can I have a set of all the balance sheets of their companies? If you say that they're so transparent, can we look at them? We haven't got it. I got balance sheets of 2 listed companies for 1 year. That's it. And that is exactly what the court has said. The Supreme Court has now said, whether it was SEBI, whether it is the Securities Appellate Tribunal or the Allahabad High Court, and finally the Supreme Court, no documents have been produced. The biggest mystery about Sahara is, who are the investors? There are supposed to be crores of them, and last week they wrote to SEBI saying 10,000 people have gathered outside their office to collect their money. So I sent out a tweet on Twitter saying, is there anyone from Lucknow and Kanpur who can verify for me whether there are these large number of people who have gathered to raise the money? And I've got at least 3 or 4 replies to say nothing of that sort is happening. They have no problem lying. When RBI asked them to return this money, there was nobody. I called another investor association that I know, which used to initially operate out of Kanpur and now in Delhi. This is called Midas Touch Investor Association. They have a helpline which handled 14,000 complaints in the last 6 years. Okay? Not one complaint was from a Sahara investor. And this is important because this company is playing such a big role in our society. I mean, all of us adore our cricketers, right? And the national team is carrying a logo of a company. Nobody knows its investors. Pune is host to their IPL team. Nobody knows where the money is coming from. We know that they have enormous amounts of money. They're buying a global hotel every day. They're buying an IPL team. They're sponsoring the cricket team. Nobody knows who the investors are. This is India for you. And this is why, if you don't open your eyes and worry about your money, nobody else is going to do it. Now going to the next one, which is banking safely. Here I keep saying that we are lucky that 85% of our banks are still nationalized, which means that whether or not they operate safely, Sarkar takes care of you, and it's nationalized, so you don't have to worry too much. So if it were your hard-earned money, ideally keep it in a nationalized bank, because at least you know that your money is safe, because it's a government bank. Cooperative banks we find are most dangerous because they are neither regulated fully by the RBI nor are they regulated by the cooperatives. You know that it's highly political, which means that as much as 3 or 4 years after that bank's net worth is completely wiped out, the RBI doesn't take action because it's under political pressure. The latest big name that has seen action after so many years is Madhapura Cooperative Bank, from which Ketan Parekh had taken out 1,000 crores. 12 years, okay? The scam happened in 2000. And action happened, I think, 2 months ago. So that's how long it takes. If it were my money, I wouldn't put it there. People say our deposits are insured. It's only 1 lakh. And all the money that has been ever paid out on this insurance is only for cooperative banks that have closed. So the insurance premium is collected from nationalized banks, private banks, foreign banks, but the payout has happened only and only to cooperative banks, which at least once a month, if you follow RBI press releases, at least once a month there is a bank closing. Big private banks. Now if you get an SMS saying there's a run on some bank, I would advise you don't run, because too big to fail is a principle that's now applied globally. So don't rush to go and withdraw your money from ATMs. It's pretty safe. And I keep saying the best example is Global Trust Bank. It wasn't even all that big. Okay? Yet, after the Ketan Parekh scam, the RBI didn't allow it to collapse. It got a shotgun wedding, as we call it, forced a public sector bank to take it over. Your money was safe. Foreign banks, by and large, in 2008, you had 1 collapse. They woke up very quickly, and the regulators decided it's better for the system if they do not allow banks to fail. So it hasn't happened. Having said that, I'm saying banks are safe. Does the same thing go for relationship managers? I mean, this is a new creature that has come up in the last 10 years, right? And all of us were very excited when you got those calls saying that I'm your relationship manager, can I come and meet you? So all of us who are used to going and standing at a bank waiting for the teller to finish his conversation with his neighbor, and you're waiting patiently to get your money out, you're getting a call from the bank saying that he's going to come home, he can even get your cash withdrawn, open your FD, so you are thrilled to bits until you realize that that's the least of his interest. Yes, he does that also, but he is coming to meet you only to hard sell. So I mean, you have this amazing situation where a person comes to you from the bank and you want to open an FD in a bank and he says, "Aap FD kyun khol rahe ho? Why don't you put your money in ULIPs? Okay? Or why don't you put your money somewhere else?" In fact, he is doing everything to dissuade you to keep your money in the bank. But he is the bank's relationship manager who is coming to meet you. I mean, this is something that you need to be aware of. You need to understand how they work. These are not bad guys. They're just doing a bad job. And that bad job is high pressure based on how much of commissions they're able to generate every week. At the end of each week, they're analyzed. And if they're not able to generate bigger commissions, they lose their job. So as far as you're concerned, you're a white face. You're not a person. You're a white face with an account that they have. They have to see whether they can persuade you to buy mutual funds, to buy insurance, to buy anything else that generates a commission for them. And they are not going to be there for the long term, so they're not building relationships with you. I mean, chat up any relationship manager and ask him, if it's not his first job, how long was he there in his previous job? And most of them will quite innocently tell you, rattle off 6 names because they think it impresses you. So they'll say, I was in HSBC, I was in HDFC, I was in ICICI, I was in something else. And what it really means is that every 4 months, they are, judged for their targets and they're losing jobs. They're getting new jobs also because there's always someone who's ready to hire them. But this is the job that they do, encourage you to churn investments. Now, why does this happen? So every few months, obviously, if they're changing jobs so often, you're getting a new RM every few months, right? At least I do. And I think that's true of everyone else. Why does this happen again? Because the last guy is gone. So now when the new guy comes, the recommendations also change. This is not something that we've come up with. This is a guy who wrote a book called If God Was a Banker after having worked 18 years in the banking system, Ravi Subramaniam, who came and did a lecture for Moneylife, and that's what he told people. The reason this happens is the last guy's commissions don't carry forward to the next relationship managers. The customer is the same, but the last guy and the commissions he generated from you are gone with him. And the new guy has to generate fresh commissions. So the only way he can do it is to tell you, I think you made a wrong investment. I don't think this mutual fund is good. I think you should close it down and buy something else, which means that there is going to be a fresh commission for him. The same applies to ULIPs. Okay? So I think you need to think hard if you're going to depend. And this is a horror story. I don't know if you're regular readers of Moneylife, you would have heard Sucheta Krishnamurthy's story. She had an account in HSBC, and it's something, I know we have bankers here, it's something that all of us need to think really hard about, because one of the things that we do in Moneylife is to campaign for change. Okay? And here is HSBC. She got a settlement of 3.6 crore which came into her bank account. Now, Suchitra is on Twitter, but she didn't tweet it. Okay? She didn't tell the world that, hey, I am rich, I've got divorced and I have this money. It is her banker that is breaching its fiduciary responsibility, which is allowed to peep into her bank account, which gets to know that suddenly this woman has 3.6 crore in her bank account. So what do? They send 2 smart-looking relationship managers wearing a jacket and a tie. She's emotionally disturbed. She's going through a new phase in life, wondering how to manage on her own. And here are 2 smart-looking bankers from HSBC. It's an international bank. It's not some local cooperative bank. They're coming there, talking to her very smartly and telling her, ma'am, you have all this money. What do you plan to do? Because you get a very low interest in your bank. So they encourage her. She needed to buy a house. They tell her, put your money in ULIPs. You will get a return of 30,000 a month, okay, which we all know is completely false. That 30,000, don't go and buy a house from this 3.6 crore. Instead, take a home loan, and the ULIPs will pay for that home loan, because that 30,000 rupees is enough to cover your EMI. And she believed it. Okay? She does what any one of us would do. Why should I not trust my banker? It's a question that we have asked the Reserve Bank of India. We've written to KC Chakravarti and say, what kind of system are you creating where I need to say, don't trust your banker, watch out for it? I should be able to trust a banker. In fact, even the manner in which bank buildings are built, it's like you walk in there, they have these long corridors. It's all aimed to create trust, solidity, an impression that they are there for thousands of years. So why should you be taken for a ride? But she has been taken for a ride. She has written letters. Everybody in the media has covered this story. The bank doesn't care because it knows an individual going to court. Now, she's got a double whammy, okay? If it's a ordinary activist or you and me, we would probably have gone and appeared in court ourselves and fought it out for 10 years. The minute she's a celebrity, she wants a lawyer, she'll get an expensive one because no one's going to do charity for her. So if she wants to fight the bank, every hearing she's going to be shelling out money to a lawyer. And I think HSBC is banking on the fact that she won't have the stomach to keep this long, expensive fight going. I don't know if she will. She's filed a civil and criminal complaint just now after sending several notices to the bank. But believe me, if she's already lost over 1 crore of rupees, she's going to lose more because each time, unless she decides to argue her case herself, there is a cost attached to the court case. And I feel personally very, very strongly about this because today your banks are the safest. Okay? And we have examples of senior citizens who have gone to operate accounts on behalf of their children and they're caught over there and the teller is persuading them, why are you keeping your money in a nationalized bank? Why don't you move it? You get a much higher return. So here you have people who've gone through a phase where FD interest rates were 4% and somebody is telling you you get guaranteed. They use the word guaranteed, 25 and 30%. They are shifting their money and there's lots of money that has been lost because of mis-selling by bankers. We had the insurance regulator, a lot of it is in ULIP, so we had the insurance regulator come to Moneylife recently and one of the points that our demand was that banks should not be selling insurance at all. And he just coolly turned us down. He says, not going to happen. We will not do anything as drastic. Now, if you ask me, we don't agree with him. But unless we have numbers of people who are affected, who are coming and attending our seminars, who are ready to make the effort to write at least an email to us saying we support what you're saying and let's lobby the regulators, nothing is going to happen. Because, I'm safe. I'm not making foolish decisions. If you know people who are doing this, please encourage them to start reading and to write these emails so that our case as an NGO is strengthened when we take up issues with the regulator. So what is the way to keep yourself safe from this kind of mis-selling? First, ask a lot of questions. See, I'm not saying relationship managers per se are bad. You use them to get information, use them to open FDs. For everything, it's part of their job, it works. If you have decided, I'm going to buy X mutual fund or Y insurance product, by all means, you want to be nice to your relationship manager, buy it from them if you want to. But don't depend on them for advice. That's the small thing that I'm saying over here. That you must negotiate everything. You must make up your mind yourself. There is nothing like loyalty. So you can't say my father had an account in HSBC, I have it. SBI had a series of ads. Okay? But what does it mean? Does it mean that they'll keep your money safe because Dadabhai Nauroji had an account over there? Yes, your money will be safe. But if they have a relationship manager who sells you a ULIP or encourages you to put your money in Ocean, that's your problem. And it's got nothing to do with how many years you banked with them. Those are decisions that you have to take yourself. You have to demand references. So if somebody says, ask X or Y, I've given them great advice, don't believe it. Ask for references, call up people. Main thing that you need to know is that everybody is very friendly, giving you your mobile numbers until you signed on the dotted line. Once that is done, they are not available to you. Then all that you get is the call center. Dial 1, dial 2 for bank accounts and dial 3 for credit cards. So if you don't want to be in that situation, you must have the mobile and email of your relationship manager. That's a must. But that's of no use, okay? Because the guy has left the job 3 months later. And we've had senior chartered accountants and others complaining about it. They even have got them in a situation where they couldn't close their insurance unless the relationship manager signed and he was no longer working with the bank. So there has been weird stuff like this happening. So you need to know the guy, you need to know 2 levels above him, you need to have their emails and you need to have their mobile numbers because those are not guys who leave easily. Third thing that you need to do is that if they make you promises, like guaranteed returns, 25% definitely, then none of this is ever in writing, as you all know. So you put an email down in writing to all these people up the chain. What does it mean? It means that by and large, if it is too blatantly false, they will correct it right there and say, no, there is no such promise and we are not assuring you of it. The second thing that happens is when there is a dispute, as there is bound to be, okay, at that time you can go and complain to the banking ombudsman, and if you have an email trail which shows that you asked the questions, even if they did not answer, it still means that you're fairly safe. And that's something, that's the least that you have to do as a precaution. And Indians are notorious for doing everything on the phone, so please learn to ask for emails and put things on email. I now move to the next thing, which is credit cards. Again, like relationship managers, I have to start by saying, do you need a credit card? What's the answer? Don't need it. No, I disagree. You need a credit card. Like I said, you're stranded at the airport. What will you do? Yeah, you're booked on a Kingfisher flight. You reach the airport, it's cancelled. So are you going to look around and say, will you give me 10 bucks and 20 bucks or whatever? You can have a debit card, of course, but it's taking money out of your bank account. So if you're in your first job going from Calcutta to Bangalore and you're just about to join Infosys, what do? You don't have money in your bank account to pay with a debit card. But if you had a credit card, then you probably at least are able to fly to Bangalore and have a chance of earning your first salary, right? So I think credit cards are required, are important. You missed a flight, like I said, emergency, hospitalization. You suddenly need to run or take somebody that you know to the hospital. They don't care. You can bleed to death. You've read any number of stories. You don't pay, they're not interested, right? At that time, you can't run around to your neighbors and friends and say, give me money first before you rush someone. So I think a credit card is useful as long as you know the mechanics of a credit card and know the dangers of a credit card. So it's not for nothing that you have, we had a cover story and this was our picture on the cover. And you have Scott Adams of Dilbert saying credit cards are the crack cocaine of the financial world. And why is it that he says that? Because people don't keep their credit limit to zero. They think they can keep spending. The card is there. And why do they do that? Because clearly that is what is bombarded to you in terms of the ads that they put out. You've seen every one of you have seen this MasterCard ad, right? What is the last line? The look on his parents' face on their first foreign holiday, priceless. Okay? And I keep saying that imagine it was 2008 and this little idiot had taken his parents' business class, hired a limousine and lost his job. Then when the recovery agents come home, the look on his parents' face would be really priceless. Because here they are thinking that this guy is doing so well in the US and only to discover that he didn't have anything. He was just showing off and spending on a credit card because MasterCard told him that you don't need to worry about anything, keep spending. So whether it is for your granny or your parents, life doesn't work like that. Okay? You spend, you have to pay. And when you pay, if you're not able to reduce your credit to zero in the first billing cycle, then you have to pay through your nose. And that is why it's called the crack cocaine of the financial world. Banks will tell you that interest rate is not above 30%. We know that it goes from 40 to 65. One foreign bank admitted before a Supreme Court that it was even as high as 72. I read this book by Ravi Subramaniam, If God Was a Banker. And I was personally so horrified because I thought that thanks to RBI having woken up, some action was taken against the manager. And Ravi writes, without naming the bank of course, that the chap got a promotion because less than 2% of the people, in spite of all the articles in the media, actually called up to complain. And the bank made millions of dollars on the Citibank Suraksha. Even today you have Tata AIG, which is bundling in these insurance products without telling you. So are others. Why name only Tata AIG? Many others are doing it because it is the human mind. Okay? The minute it's not 3 digits, most people who are earning 30,000-40,000 rupees a month think it's just too much trouble to call up and say dial 1 and dial 2 and register your protest when the voice, human voice on that phone line is finally ready to listen to you. So this is the kind of money that banks are making when it's all aggregated. So if it doesn't matter, doesn't matter. If you don't want the banks to enrich themselves, make an effort. It is I'm only going to stop by saying it is the one area where people in India have the maximum losses because they don't know, it is complicated, they don't know how to choose a product. We've had the example of someone from Goldman Sachs who called someone to his house to buy insurance for his 3 kids. And he thought it'd take about half an hour or an hour because, he's Goldman Sachs, came from Wharton. After an hour, he gave up. He says, too complex, leave the papers, I'll study it and I'll call you back. So if any of you think insurance is easy and, because some agent says, main hu na, you're going to do it, it's not going to happen. And luckily for us, it's not us saying it. There were times when in our seminars, people would get angry when we said that you get missold insurance. Another set of people that you don't listen to, I'm a great fan of Amitabh Bachchan. Sachin Tendulkar, of course, is God, and Irfan is the best actor. But go and watch the cricket or the movies. Don't depend on them to buy insurance. Yeah? I don't think I need to say more than that. Why don't you do all these mistakes? Because it all adds up to what is called your credit history and credit scores. Now, the banks just report you to one of these credit companies, and it can damage you for a long, long time. In Moneylife, we have a tie-up with Disha Financial Service Counseling. This is a not-for-profit organization which the Reserve Bank of India asked ICICI to set up. Not too many people know about it, but it is not just for counseling when you're in distress. If you have a problem understanding financial products, you've been sold something that you don't think works, please make the effort to call. You can call Moneylife also, and you can take a one-to-one confidential appointment. They come to our office twice a week. They have offices in 8 different parts of the country. You can talk to them directly, but make the effort to reach out to a neutral person because Disha counselors are usually ex-RBI people. They are not going to sell you anything. They're going to actually listen to your issue, explain instruments, improve your understanding, and help you. Abhay is being set up by Bank of India, but I think it has only 2 branches. One is in Bombay and one is in Delhi. Disha has a little more. And the best thing about Disha is, thanks to tie-ups with people like us, you can actually do it via email. You can at least get your basics from them. So feel free to write to us. Thank you so much.